Well, good morning, everyone. Welcome back to another Stock Market Open Live. We've got PPI coming out today, unless my memory serves me completely poorly. But we did have some international and geopolitical news today that Alexander Navalny, I always mess up his last name, has officially been murdered by Vladimir, has collapsed and died suddenly. Little bit of an international development there in the world of Vladimir Putin's Kremlin. And now, I guess with that covered, let's hit the stock market. Yesterday, Super Microcomputer did it. It finally got to its 5x, and it is now over 1,000. And the amount of people, it's up another 6% in pre-market. First of all, the last time we've seen a company with this kind of relative strength was during the GameStop era of January of 2021. So this is like nobody knowing about this server rack company to all of a sudden everybody has to have a piece of this server rack company. It is absolutely entertaining to watch. It is extremely desirable to short, but is also extremely stupid to short. So you kind of just have to watch. But anyway, here's Super Micro up 14% yesterday after being up another now up another 6% in pre-market. This has basically been green all February. I mean, if I go to the normal candlesticks here, we go back, here's February 6th. We've had one red day. 1 day down, negative 0.66%. Otherwise, it's been straight green all February. Absolutely incredible. It has been, yes, indeed, an amazing stock. So what's interesting is it's fundamentally detached from reality. But hey, great. This is pretty cool. So anyway, congratulations to anybody who's holding it or in it. This is phenomenal. And it's also very important to recognize the odds of a company getting to, a 95 RSI. Again, the last time this happened, GameStop short squeeze. That's how crazy this is right now. Also, keep in mind, it's almost near impossible to say anything bad about this company because everybody will get mad at you. So you have to bow down to the gods of the rack. Bow down to your rack and make sure that you buy your own server rack too, because if you don't buy your own server rack and everybody around you doesn't buy a server rack, this stock is probably destined to halve. So please, if you want the stock to keep going up, make sure you're supporting your favorite server rack company. Get yourself some switches, fans, cooling systems, design quotes, and server racks, because with that 8% net profit margin, they need you. Okay, so anyway, now we're at 46 basis points on the Qs, so we're positive on the Qs going into the day. We've got, let's see here, we have, and I've done my part. I'd like to be clear about that. I have 3 server racks, so thank you. Anyway, on the downside, we have Dave & Buster's down about 2.3% here in the open. 2% Ubiquity, Enphase giving up about 2% here after a 3% day yesterday. Bolero, I'm not sure what's happening in that entertainment world, but Bolero had a little bit of a run there after earnings, and that has now given up with a 5% decline yesterday, another 1% here. That might be because of retail sales. Oh, yep, thank you so much for the heads up. We got to get to the economic data coming out in 20 seconds. Thank you for that, whoever just said that. But anyway, that Bolero fall might be because of retail sales. Now, PPI, we are looking for PPI final demand 0.1, X Food and Energy 0.1, X Food Energy Trade 0.1, final demand year over year 0.6. Okay, what are we going to get? And here it comes, it comes in hot. Of course it does. Oh my gosh, every number is hot. Fan-frickin-tastic. PPI final demand month over month 0.3, X Food and Energy 0.5, X Food Energy Trade 0.6. Every number is hot. I bet the Fed knew. The Fed knew. Final demand year over year 0.9. X Food and Energy year over year 2% versus the 1.6% expected. Every single number comes in hot, hot, hot like a hot tomato. Go to the Nas. Let's see if we're actually getting a reaction here. We certainly are. Got to get that red. And as the NASDAQ goes red, SMCI is going straight up. So yeah, what you would expect. We also just got housing starts that came in at 1331 versus the 1460 expected, so weaker than expected. Building permits coming in negative 1.5% versus the 1.3% growth we were expecting. And building permits outside of the percentage coming in at 1470K versus the 1512 expected. So much hotter report there than expected. We will go ahead and take a peek at the Treasury markets reaction. This is very, very similar to what we saw on the CPI report this year. And so at this point, it's either there's a giant problem or this is just what happened in January. And it is a reflection of either the Red Sea and freight charges or just January price increases. So who knows? Keep in mind, this material has been available for longer. That's why I think the Fed knows about it. And that's why I think the Fed kind of suggested, hey, even if we get a few hotter reports, it's okay. We still want to cut. You know, and you could see that. See how they say here, transmission of this material in this release is embargoed until February 16th, right? So they know this stuff. They know this stuff early. But anyway, okay, good. So let's find out what happened here. Seasonally adjusted, BLS, blah, 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 final demand. Final demand prices declined 0.1% in December, advanced 0.1% in November, and then, of course, increased 0.3% in January, seasonally adjusted. On an unadjusted basis, the index for final demand rose 0.9%. So their adjustment actually took January down. So, again, I don't know what happened in January, but everything just moved in January. It's crazy. The index, okay, blah, blah, blah. We already read that part. So I want to see what this is made up of. Okay. In January, most of the advance, okay, here we go. Most of the advance is attributable to prices for final demand services, less trade, transportation, warehousing, which climbed 0.8%. Oh, fantastic. The services side again. Heavily affected by wages. Of course, this is not what you want to hear. Heavily affected by wages is basically a nice way of saying, hey, as wages go up, we charge more. And the ability to continue to raise prices is supported by potentially a strong economy. And this is where a lot of folks are taking these January inflation numbers and saying, oh, that's it, we're screwed. It's the second wave. Again, I think the Fed knew about this. And they already planted the seed for this. Anyway, 2.2% increase in the index for hospital outpatient care was a major factor in January price increases for final demand services. Well, there you go. So this is actually very, very similar to what we saw in the CPI report, that it was very much medical care services seeing a substantial rise in January, very similar to what we see here. But you did also have, okay, well, that's the substantial rise part. But you did also have, it looks like, now this is pretty broad-based. Wholesaling, machinery, equipment, wholesaling, portfolio management, traveler accommodation, and legal services also moved higher. So how much higher? We'll look at. In contrast, prices for long-distance motor carrying decreased 1%. Computer hardware, software, and supplies retailing for engineering also moved lower. Leading the January decline in goods were prices for gasoline, falling 3.6%, electrical power, hayseeds, oils, beef, veal, ethanol, iron, steel, lower. Communication and related equipment increased 2.4%. Okay, fine. So now what we're going to do is I want the actual table showing me specifically which categories in the services and how much moved higher. So prices and weights for final demand. We have to go to a completely different chart to do this. Hence the, oh, I hope you like the oh snap. It kind of works well for today. Okay. There we go. All right. Now we have the weights. Let's get the weights. Okay, I'm going to go all the way to the bottom because that's where the services are, usually. All right, here we go. Oh, right, but I have to understand the table, the chart really quick. Hold on. Let's understand the table. The table is, we are looking at December to January, the seasonally adjusted change on the far right, and then the fat box in the middle, okay, next to the weight for the unadjusted. Oh boy, how am I going to remember that? I don't know. Here we go. Okay, services. So what services? What is this? Inputs to stage 1 construction producers, negative 0.9%. And the, wow, that's the adjusted number. The unadjusted number was 1.3%. That's a huge difference. Okay, what do we have here? Inputs to stage 1 service producers. Services 0.7 on the seasonal adjustment, 3.7 on the unadjusted. So, huge adjustment for January, but it's clearly not enough to get you a low read here. So we're clearly above the adjustments. Services, trade services, 2.6% at stage 1 intermediate good. And this has to do with trade services. That's the big thing. Interesting. Trade services could be financial, it could be contracts, it could be auditing, outside of like transportation, right? Very interesting. Okay, services. See, transportation of passengers or stuff was actually negative. Here's a negative. Stage 2 for services, negative 3.3%. So where's the medical section? Well, these are just different phases. This part pisses me off, the different stages. Stage 1, 2, 3, 4, whatever, I don't care. Show me where the medical stuff is. Goodness gracious. Lubricants, fabrication, personal consumption, less food, energy, and trade services. 0.8%. How does the producer price index include this? This is very interesting. This report is so much more confusing than CPI. I'll give you that. I don't know the answer. I will get the answer, and we'll circle back on that, because this is just like, it's making my eyes twist around. Okay, so let's get the suit's opinion on this really quick. We do have the 10-year up about 8 basis points on this news. Also, not a giant surprise. Oh, it's been swinging around more than a swinger swings around. Okay, I shouldn't say that. Anyway, so let's see here. T-Live. Okay, here we go. Yields, dollar jump on hotter than expected PPI numbers. Yields on 2-year treasuries, which fell to 4.5 yesterday after disappointing retail sales, are back up to 4.65 after data showed producer prices rising faster than expected, both headline and the underlying level. SOFR future yields added to gains too. The yield on the November contract was 6.5 bips. Before the data, it's now up 11.5. Got it. Okay, whatever. Bond buyers back off ahead of PPI and more corporate supply. That's fine. That was before the release. Well, at first glance, it looks like the January pop in inflation was real because today's PPI torched expectations across every aggregate, notably in core readings, even with a slight downward revision to prior data. Oh, I didn't even see that yet. I was already in the document by the time that came out. We did, yeah, we went from negative 0.1 to negative 0.2 on the headline month over month, and then ex-food energy, we went from 0 to negative 0.1. So we did get revised down on the last read. However, I mean, whatever revision doesn't matter when we got such a large read this month. And let's see here. Consumer services rose 0.5%, both with or without trade services, which was the hot region of CPI as well. Looked like a recipe for yields to revisit, if not exceed, post-CPI highs, and perhaps offer a catalyst for stocks to have their usual pre-President's Day correction. Ooh, that would be today. Today is pre-President's Day. Why? Why you gotta do that to us, economists? Stop it. We don't need a 3-day weekend of everything being red. It's annoying. All right. Anyway, oil, we're still sitting above 80 here. So I'm actually surprised we had that energy decline there because we're still at 82.31. And boy, I want to see how that 5-year break even is playing out now after this data. That should help us know if this number is going to be like, how is the bond market actually taking this from the point of view of inflation expectations? So 5-year and the 5-year forward, we're going to look at both of these. Oh, yeah, it's up. Okay, well, that's what you would expect, but you never know. Sometimes it does funny things. So after the CPI report, we went from 2.3 to about 2.36, and now after the PPI report, we're about 2.4. That's on the 5-year break even. How interesting. The 5-year forward break even did not move up. It is still at 2.23. So what that means is the markets are telling you, yes, it's going to be a little bumpy. It might even take a little bit more patience up front, but it's going to go away eventually. That's very interesting. That's what the bond market is telling you. That's not what Kevin's telling you. That's what the bond market is telling you. So anyway, okay, cool. So yesterday I went to another little JP Morgan event, and there's a lot of talk about real estate opportunities. They're also really big on treasuries right now, mostly because they think, over the next few years, you'll have not only a yield, but you'll have capital appreciation in treasuries. We've talked about that before. I just want to mention that if that is something you consider doing, like buying treasuries, do remember that you're going to get a lot more capital appreciation on, obviously, a 20-year bond than you are on like a 1 or 2 year bond. Because I always think it's funny when folks are like, oh man, yeah, I bought a bunch of 1, 2 year treasury bonds and I'm getting all this capital appreciation as yields are coming down. They go, oh, how long did you hold those? Oh man, like 18 months. I'm like, what? But you already got paid out on all your 1 years and you're about to get paid out on your 2 years. So then there is no capital appreciation, right? Capital appreciation is just market movement where your bond sells at a premium because the yield on the bond is higher than what the market will currently bear. But as you get closer to the actual maturity date, that capital appreciation will actually disappear because you're just going to align with the actual value of the bond that's going to be paid out. So whereas you get like a 20-year, let's say you lock in a 20-year at 5%, rates go down to 3%, and it takes 3 years for that to happen. Well, now rates are 3%, you get a 5% bond that has 17 years left on it. That sucker will sell for a premium. So keep that in mind, like if you're looking at, oh, cool, yields went up again, here's maybe an opportunity to buy some treasuries, treasurydirect.gov, it's easy, right? Then there you go. There's a potential way to consider that. It's obviously not financial advice. You have to be very aware that that could also mean more capital depreciation if yields go higher, right? So, it swings both ways. So, what is it with swings today? Everything swings. Okay, HeartNet, one of our other bears. Bears. Yes, vice versa, Mitch. Vice versa. Got you, man. I got you. The host of similarities between tech stocks and previous bubbles may suggest the Magnificent Seven. I resent that. They should not be included. If they're talking about the Magnificent Seven crashing, they should absolutely only be talking about the Magnificent Six. Anyway, levels that may lead to a pop, according to Bank of America. Bank of America cites a full handful of indicators, bond yields, valuations, price action, blah, 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 that suggest that further gains ahead of the group. That suggests there are further gains ahead of for Apple and Amazon and the rest of the group. However, they still call it a bubble that's ready to burst. Bond yields adjusted for inflation are seen as a proxy for tight financial conditions, common way for the stock market bubbles to burst. Let me see what the Goldman Sachs financial conditions is. Financial conditions index. You just wrote sound. What do you expect? Okay, financial conditions. How interesting. They spiked on CPI day, and then they immediately collapsed back to basically where we were. So, very interesting. Yep, Steve, it doesn't surprise me on a hot CPI or PPI day for you to be here. You are right. For now. So then we have, okay, financial conditions loosened right after CPI again. That's very interesting. I mean, we did see yields drop again a little bit, but they are net higher. So I am somewhat surprised by that. Although financial conditions do include stock prices. Oh, I gotta get that coffee in me. Oh well, whatever. Valuations, blah, blah, blah. Stock market ain't cheap. All-time highs. Okay, I've heard it all before. Okay, let's take a peek at what the Qs are doing. Here, what the Q's doing right here, and this is this is actually some stability here. And I'm actually surprised it's still stable green, honestly. Let's see. SMCI is the new upstart. Oh, that's an insult. If I remember correctly, let me see here. I know upstart had like this dramatic collapse. Yes. Yeah, actually, probably. Please end the Pokeball. Oh yeah, I don't have my Pokeball cup today. I just got RuneScape right now. When Fate? No, they don't use Fate now. It's too soon. You gotta pull Fate. The Fate card comes. Oh, when does Fate come out? The Fate card comes out when you're justifying why you're reducing rates. Oh, that's interesting. Maybe that could actually be sooner. No, you might actually be right. So, flexible average inflation targeting is a weapon that the Federal Reserve has purposefully stayed silent on because they're going to pull the card at some point. I guarantee you they're going to pull the card. I don't know when they're going to pull the card. We've been talking about this for like 3 years. FADE is a 2019 Federal Reserve policy called flexible average inflation targeting, and that in some years if inflation runs low for a bit and some years inflation runs slightly above target for a bit, the Federal Reserve is accepting of that. As long as that the trajectory is to get to an average target of about 2%. So last time, history proved that in order to get inflation way, way, way down from 18%, we had to go through phases of opportunistic disinflation, which started in 1982 and essentially continued all the way to about 2019. So if you look at that historical context, that's a 37-year period. Okay, so a 37-year period to opportunistically get inflation down. You rode the Great Recession down, you rode the 2018 shock down, you rode the dot-com bubble down, the panic of, the 87 to 89 period. So there were definitely shocks, but ironically from 1982 on, which was your year of peak rates, the stock market went up in the form of a Nike swoosh from 1982 on, including a little bit before that. So it is very interesting. And I hate to say it. I really hate to say it, but boy, what is that starting to look like? Just saying. I know it. And then I did say volatile Nike swoosh. And people still today get mad at me when I say, you're going to look at this one day and you're going to be like, what the hell? Why is it 654? And it's this giant ass Nike swoosh. And I've been saying it since the bottom. So anyway, that can all happen while the Fed opportunistically fights its inflation fight. So anyway, some of your interest rate sensitives here are moving down. That's going to be your Rocket, your Affirm, your End Phase down 3%. It's still a 132 though, so it's actually done some recovering off this little hell over here. It's really stuck on our orange support over here. It's about 119, and so it's slightly above that right now. But it's got to get to 161 to really hold on to something again here. So expect it to be pretty volatile until it explodes up to 161. And then after you explode up to 161, I expect it to get right into the 200s again as it actually becomes a growing interest rate sensitive stock again as rates decline. So it's a very difficult and volatile stock to hold now. Extremely difficult. In fact, most people are just going to say, oh, look at Trade Desk. Most people are just going to say, I'm going to, buy that stock in the future. The problem is, in the future, you end up looking at in my opinion, like a super microcomputer where it's like, well, I can't buy it now Although some people will still buy it and they'll tell other friends, "Oh yeah, I'm in super microcomputer." "Oh, that's cool. When'd you buy?" 1,000. And it still looks like not a bad idea since it's up 6%, right? But anyway, Trade Desk reported Trade Desk up 606 million versus the 582. 41 cents versus the estimate of 38 cents. Trade Desk announced additional share buyback authorization of $700 million. See, they make money. That company prints money. And so they have a very upbeat tone, which calmed the ad slowdown fears. You know, Facebook was your tell that they were probably going to do well. So, Agent V says, Kevin, I think you're shadow banned. No, you're shadow banned. Okay. Yeah. You know, who knows? You know, it's tough because it's the live channel, right? So I don't think the live channel really shows up in search. So you're not wrong there. So let's see here. Oh no, I don't like the PEG ratio more than I like things like DCF. The PEG is just one tool, right? So when you fundamentally analyze a stock, or just analyze a stock to invest in, you have to consider sentiment. Like, you can't, it's very difficult to fundamentally factor in, you know, the go woke, go broke attitude. Like, how long is that going to last? Well, history will show you it lasts a lot longer than you might think. So you also have to consider interest rate sensitivity. You have to consider the technicals of where a stock is. Then you could get into evaluation. Okay, well, what is dare I say, or start sounding like the Fed, what is a neutral PEG multiplier that is reasonable? Well, for many stocks, I think that's 1.67, so I could backwards valuations off their growth rate. You know, if I have a company that's a $100 stock with a 10% growth rate and a neutral PEG of 167, I got a $1,670 stock. That's just a quick way that you might be able to do it. So okay, that's just one way. Discounted cash flow. The problem with most people who discounted cash flow is look at anybody's DCF and have them explain it to you in 30 seconds. It's impossible because there's so many assumptions that go into it, which make discounted cash flows an extremely dangerous tool. Okay, what discount rate did you use? Why is that a different discount rate from the discount rate you're using for other companies? Why? It's because you want to buy the stock? Okay, why is your OPEX assumption, you know, X% growth? Why is your, and then oftentimes people go in and they have different growth rates for the different portions of OPEX. It's like, well, how does that align with what could actually potentially happen? So you have all the OPEX assumptions, then you have the growth assumptions, then you have the tax rate assumptions, and then you have to consider distributions. So now you have to consider free cash flow as well, versus just factoring the growth rate of the company's earnings. Now you have to decide, well, of those earnings, how much are they actually going to keep versus paying it out in stock-based comp? Or how are you going to assume how many shares are going to be outstanding in the future for your discounted cash flow? You know, because you got to consider buybacks or share dividends. It's insane. Like a number of assumptions that you have to do in a discounted cash flow. Look, people feel all hoity-toity. Oh yeah, look at my DCF. I have big spreadsheet. It must be right. One of the first things I tell people is take your discounted cash flow and shove it up your ass, and now let's talk actual fundamentals, because it is mostly stupid. It is mostly worthless. So that's my take. So now, don't get me wrong, I'm not opposed to speculating on growth rates, but the amount of speculating you have to do to actually do a DCF is very stupid. So that's just my take. Anyway, so yeah, Trade Desk, very, very good here, and also their forecast is Q1 adjusted EBITDA of 130 versus 112, which is pretty incredible. So then you have what is this? Thoughts on Uber stock over the next 1 to 2 years? Well, yeah, sure, JJ Morales. Then you could plug it all in. You could do a Monte, Carlo simulation, and then you run your assumptions through, 1,000 different assumptions, and then you pick, a median weight, and you pick your bear and your base and your bull. Look, I get it. Okay, I totally understand. I'm just saying, like, if I take a bunch of assumptions and throw them into a blender and say, now I've blendered my assumptions 1,000 times, There's still a level of assumption that's built into there, and I would rather fundamentally analyze that underlying growth assumption than I would take your growth assumption of 20 different things put together, thrown into a blender, shaken up for 1,000 different realities, and then taking some form of, midpoint of that. It's insane. Like, it's a wonderful way for people in the finance industry to tell their boss that they're actually doing their job. In my opinion, it's a disgrace. So just because it's so ludicrous, how much goes into it, that's highly unpredictable. So anyway, if you can't tell, I have a small opinion on discounted cash flow. Now, I'm going to answer the person's question who has asked me about Uber like 17,000 times this morning. Obviously, they've done very well post-earnings here. I have not looked at their earnings yet. I'll do it right now. They've done exceptionally well. I mean, look at this stock movement. It's absolutely freaking incredible. The sucker is at all-time highs. It is doing exceptionally well. Its robo-taxi risk is very low in the near term because we're not close. And so your biggest risk of taxi drivers being replaced is probably 10 years out. It's not a substantial or realistic concern at this point for these companies. They've personally given up on their ambitions of full self-driving, but that's okay. Let other people bang their heads over that. So I don't blame that. So then in the near term, the next 2 to 3 years, you're pricing in, you're essentially trading a stock that's pricing in growth. Let's find out. We have cash flow. So I just pulled up their 10K. We have cash from operating. How are you losing money, Uber? What the hell? You have net income, net loss of 570 mil, net cash by operating activities 445. This is stupid. Okay. I personally don't like taxi companies, but it's okay. So their revenues at 17.4. Oh, wow. Okay, wait, hold on. Did I read this right? Oh, no, okay. I read this backwards. I'm sorry. They're not losing money. They're actually making... That's what I thought. I'm like, how are you still losing money? You used to be losing money. I thought they were making money now. I'm sorry. They flip the years on the cash flow statement. They're part of like the 5% of companies that do this just to F with you. And you have to be really careful about this because when you get those 5% of companies that do this, you read everything backwards. So this is why usually when I'm using my iPad, I always circle what year I'm on. I read the wrong year. I apologize. They actually have net income of $2.1 billion. That sounds a lot better. And they have net cash from operating activities of $3.5 billion. See, that's really good. Free cash flow is over $3.3 billion. Very, very good. Stock-based comp was $2 billion last year. But who cares? They made plenty of money. And they still had plenty of free cash flow. So good for them. You've got revenues at 37 billies. And their net income margin out of that 37 bill is 2.1. Okay. Hold on a sec. I got to pull a margin on that. So that means we finally scaled our OPEX to the point where we're really profitable. Well, they had a really good year. Net income. This is why I wanted to look at their numbers again because it's been so long since I've looked at their numbers. 37,281. They have a 5.8% margin. And 5.87% goes to the bottom line. So every time you spend $100 in an Uber, $6 goes to their bottom line. I mean, that's the way to look at it, okay? Then you've got net income. Oh, and then they've lost prior, so I don't really have any period to compare to. They're growing revenue, 37.2 divided by 318. Growing revenue by 16.9%, whereas their S&M, wow, their sales and marketing declined. You bastards. Oh, God, it's so perfect. No, they've done a fantastic job. Massive cash flow, massive net income, full self-driving threat is low. You've spent less money on advertising and you've made more money. And I'm sure their guide was actually pretty good for Q1. Let me see here. Guide. It had to have been. Guide. Oh, yeah, there we go. Okay. So, gross bookings for Q1. well, adjusted EBITDA rather, of 1.3 billion. 1.3 billion in the quarter. Oh, that's pretty good. Their earnings before interest, taxes, earnings previously were 37. Okay, so that's good. Wait, what? Hold on a sec. EBIT, adjusted EBITDA, 1.34 billies. Hold on, let's see here. Interesting. Okay, so, oh boy. That guide. Hold on, I want to see how that guide compares. That's what's throwing me off a little bit, is I need to find out how this guide is comparing. But I have to say, that's really impressive, actually, so far. Let me tell you, though, how this guide compares. So, Uber. EBITDA growth in the 30 to 40% range in the next 3 years. It's fantastic. Bottom line's growing like crazy. And then Q1 gross bookings. Oh, yeah. Okay, they beat the estimate by about $500 million on gross bookings. Okay. All right. And then Q1 adjusted EBITDA also beat. Yeah, I mean, it wasn't even in the range. That's great. And they beat across the board. They did a fantastic job. So, I mean, I was in an Uber twice yesterday. And I actually had good drivers. They've gotten a lot better. I think there's a lot more supply of drivers now, so you're not getting the low-starred reviews anymore. A lot more people apparently driving Uber when we talk to the Uber drivers about that. So, okay, good. That's very interesting on Uber. You know, Airbnb had great earnings as well. And we analyzed that in the course member live stream, and their stock didn't actually move that much. I mean, I know they were up 6.4% yesterday, but it's pretty incredible. So yeah, all good, Brandon. No worries. Kevin, I was visiting Arizona, and they already have some robo-taxis there. Yes, I've seen that. It's because Arizona's a rectangle. It's a freaking rectangle. 1.67 on the peg is usually what I use as a neutral rate. Brent Newcomer, I was laughing out loud at the DCA opinion. I know a few Wall Street bros who would be screaming blasphemy. That's fine. The signal and noise, yeah, I hear that one's pretty good. When I say shareholder equity, what exactly you mean? Like how much of the float is held? I don't know in what context that is, because I think you were responding to something I said. The initial reactions to hot CPI, PPI are such a joke. Look back almost a year and you will find seasonally adjusted January is hot every year due to price resets in many industries. Lynx Golf Pro. Lynx Golf Pro. I agree with you. Good job. I agree. Get an intern to Uber or gig for a quarter and report back to you. We don't need to do that. Uber is part of society. I agree with that. I agree. And again, the FSD risk is far away. But Kevin, you hate Bitcoin. It's anti-communist. Well, you know, you gotta love loaded statements like that. What did y'all make Mitch leave? Mitch is like, peace, y'all. I don't know if he just like got angry and walked away. I also don't know what his problem is. But anyway, can you predict the top of the crypto to the day again this cycle? Wow. Arbor Realty just reported. Looks good to me. Oh, I'll have to look at it. Yeah. Wow. Well, I'm happy to think about that one. I haven't even put thought into it. That was pretty incredible last time. You were right. Thank you for remembering. Somebody sent me a text yesterday. They're like, here's a screenshot of Kevin saying this might be a bottom for Coinbase. And I said it was 118, which is, as it was going down, I'm like, it was like 158, and I'm like, I think 118 is the bottom for this sucker. And it was going down, and I sent an alert out when it was 118. It looks like for a moment there it went even lower. But anyway, it was pretty close. It's straight up from there. It looks like the candle within the hour actually went as low as 114. Really? How interesting. And I'm going to try to go back. I'm not going to go back all the way to this. Anyway, most of the time it seemed to be right around 118. So 114, that's pretty close. But that was interesting. Super Micro is now at 175. Okay, very good. Yeah, no stopping you here. Coinbase on those earnings yesterday. Remember, those were earnings that were pre-ETF. So yesterday I was asked about Coinbase's earnings, and I said that I thought they'd probably be okay unless they guided poorly, mostly because, this is all pre-ETF, and I think it's going to be a while before you actually see Coinbase's revenues affected by these ETFs. Let's see here, shareholder letter. If I just go look at their, oh God. I'd like to get their forecast. Oh, it's going to take forever. Looking ahead. Begin measuring our crypto assets at fair value in Q1, whatever. Tax rate, blah, blah, blah. Okay. Yeah, well, they still made good money. I mean, they still made, what is that, $273 million in a Q4. And their revenue exploded. They did a great job. They didn't take restructuring expenses. Their G&A got cut a lot, like $80 million to become more efficient. Technology and development got cut like 50%, well, more like 40%, but really good job. Transaction expenses didn't go up that much for how much revenue they made. These numbers actually look very good too. It seems like they did a good job. Yeah, again, too soon to tell on how ETFs will affect them. And I doubt they mentioned anything in their earnings call. I suppose I can look really quickly. I don't really want to, but I'll do it. Okay, coin. Oh yeah, and I have to leave early today, so unfortunately that means I do not get to do a course live today. Next course live, sadly, Tuesday. Yeah, I gotta go soon. But anyway, let me pull this up really quickly. This is the Coinbase earnings call, and I'm sure if I just take in, I should just look for the word custody. We saw inflows of custody, of course we did. Coinbase custody is about 90% of the 36 billion in Bitcoin ETFs. Yeah, we want to know how much that is. How much money are they making off that? The ETFs broke records. They got to 3 billion in a few weeks. Great. Yeah, the ETFs are great because you get that SIPC coverage. So they don't actually talk about how much money they made from custody, as far as I can quickly tell. Most customers own 2 crypto assets. Look at our trading volume. So they are having the discussion here. So I think that we believe the Bitcoin ETF is introducing new capital, folks that were not coming to the spot market. So in other words, they're like, hey, if you're buying crypto yourself, you're still buying it yourself. ETF buyers are new buyers, so therefore they're not taking away our trading revenues. Okay, all right, that's a fair argument. That's definitely a fair argument. I think that's quite reasonable, actually. If I go to Bitcoin, we could see we're at which Coinbase really trades as a proxy, almost for Bitcoin, or at least in line with it. You're at 52.3, which is roughly where you were yesterday. Ethereum's almost at 3K again. It's up like 12% this week. Solana's at 111. Cardano's at 60 cents, up 10% on the week. Avalanche up 9% on the week. Crazy. Immutables up 31%. Uniswap 12%. Uniswap. So I want to look back on that one. Oh, wow. Yeah, I mean, you look at the year, it's at almost year highs, but I mean, it's nothing compared to what it was in 21. Well, that's true for a lot of things. Anyway, so bonds, 4.31 this morning. And let me see what else is going on today. Okay. Different demographic for the spot ETF that's targeting. Yeah, exactly. Should we start buying NFT? Uranium. Yeah. I talked about Putin actually in the first 20 seconds of this. There, I bumped the volume. Yeah, you're right. The volume did go low again. Test. There we go. I just popped it a little bit. I actually think I can't blame Max. I think I lower it sometimes when I'm filming because otherwise it pops. So, oh, I actually just met with Ross yesterday. Haven't had a GK interview in a bit. Yeah, Ross. Boy, we met for like 3 hours yesterday in Malibu. In the Boo! So that was pretty cool. Higher inflation is actually great for the stock market in the long term. Sounds crazy, but no wonder elites tell us inflation is good. It transfers money from the nots from the have-nots to the haves. Oops. All right. Yeah, that's also true. Doesn't it matter if new buyers are going to the ETF because it takes away future buyers? Yes, that's a very astute observation because it basically suggests that you just kind of somewhat plateau. Ooh, that's a good one. I like that. Yeah, that's a good point. Oh, yeah, the Michigan report. The Michigan usually comes out at 7 a.m. Yeah. Nope, sorry. Won't be around. So, all right, let's take a peek here and we'll see what some of the suits are saying again. Trade desk numbers, phenomenal. Coinbase, phenomenal. You know, here's another one that's moving like crazy. Lunar. It totally was like a meme stock there for a while, but it seems like it's blowing up again. Let me see. Let's see if you could touch this thing with a fundamental pull. Oh, this is because they're having their launch event. That's right. Some rocket ship. Oh, they launched it yesterday on SpaceX's Falcon 9. Oh, so they loaded some form of lunar lander on the Falcon 9. The Falcon 9 is delivering the lunar lander to space, presumably. And maybe the sucker will end up landing on the moon and actually doing something productive. Well, that's cool. What is there productive to do on the moon? I don't know, but it sounds cool. NVIDIA is up 1.82%. Look at that, 139. It has not closed above the resistance yet. The piece de resistance. It has not pulled it off yet. Look at that. Look at that. No candlestick above it. No candlestick above it. I am seeing an increase in manufacturing jobs posted online. Man, Andrew, what do you do that makes you search online for manufacturing jobs? Also, starting to see pay increasing by dollars, not pennies. In terms of the offerings. Yeah, potentially anecdotal here, but yeah, interesting. The markets will be closed for George Washington's Day. President's Day. Is that seriously like a debate now? Whether you call it G-Dub Day or President's Day? Oh, good Lord. Everything's a freaking debate these days. I can't handle it. Talk about Tesla? Well, Tesla needs someone who can actually lead with some real guidance. Again, I'm not saying it doesn't need Elon. No, I love Elon, but he's not really good at communicating to investors. Well, at least the Wall Street type. The long-term Tesla bulls will say Elon can say no wrong. Really? Okay, that's very interesting. As somebody who works for a larger manufacturer, I second we are hiring a lot. And Peggy said, see, that's very interesting. I do wonder how much of that is a January increase versus, sort of a longer term trend. But it's going to be something to watch. Wages should go up. Real wages are going up, right? We want wages to go up. Wages going up is actually a fantastic way to keep the economy going. What makes me nervous is, and no time soon, but eventually we will have a giant mega bubble again of debt. And I personally think it's driven by consumer debt this next cycle. I think the next cycle is potentially, it is potentially seeing all the BNPLs, BNPL driven bankruptcies. You know what you need? You need a bankruptcy BNPL app. Going bankrupt? Here, use this BNPL app on all your debt. It's like a debt consolidation, pay later thing. So it's like consolidate now, pay later. CNPL. Or like borrow now and bankrupt later. The name's going to need a little bit of work there. But, yeah. Toast. We have not looked at Toast in a while. Generally, when I look at their financials, I think they're ridiculous. Oh, it is up 9% today, though. Yeah. I remember when Toast came out as IPO, I was pretty bearish on the Toast IPO. That ended up being right. I was also bearish, though, on the ARM IPO. And, boy, that thing has skyrocketed. But then again, a lot of people are, look at that. This is crazy. A lot of people are suggesting that because there's so little float outstanding, which was my big problem with it, a lot of people think SoftBank is actually trying to gamma squeeze this before their lockup at the beginning of March, and that you're going to have a giant crash once SoftBank dumps this stock. Yeah. So you heard it here first. Well, maybe not. I don't know. What's this? I'm in manufacturing. I was able to argue for a 15% pay raise just from comparable listings in the tri-state area. Significant increase. Wow, good for you. I guess if there's anything I could say is that manufacturing does not affect directly, at least, consumer prices for what that might be worth. I work for the largest, at least not directly. Indirectly, it creates pressure and desire to. I work for the largest supplier of audio-video labor equipment. The amount of diversity here is incredible. For entertainment, concerts, festivals, Broadway, end of the year sales way down, January big boost. Is that every year, or are people just happy again in January? I don't know. Stock market all-time highs. Who knows? Who knows? Who knows? Nike to lay off more than 1,500 people. It sounds like Toast is laying off people as well. Everyone layoffs. Toast. Call it BK hack. Yeah, there you go. Who's going to be the first customer? So, Toast, cutting jobs, about 550 employees. Then you've got Roku. I work at John Deere. Oh, somebody who's actually shouting out the company they're working for. Let's go. And our production output has been cut in half. We have been going on bi-weekly shutdowns since the beginning of the year. Holy crap. Bi-weekly shutdowns. Obviously, this is all public information, everyone. Completely public information. John Deere has been going on bi-weekly shutdowns since the beginning of the year. So, there is this argument of basically mini recessions, and basically everything going through its adjustment cycle, so to speak, right? So it's all, I suppose, part of the volatility of it, but I don't know. Like, some of these things just aren't sustainable. Some of this insanity that's been going on in the stock market here. So I actually expect, I think it's starting to get so frothy again in certain stocks that I think we're getting to where it makes sense to increase cash positions again. Like, am I gonna do I think it makes sense? And again, this is not personal financial advice. Do I think it makes sense to sell a loser like Tesla or Enphase right now to raise cash? No. Do I think it makes sense to trim, good Lord, the server rack company, Super Microcomputer? Absolutely. You know, take half off the freaking table, ASAP. Do I think it makes sense to trim a little bit of NVIDIA? Possibly. Even my expectation is even when they beat on Tuesday, it's gonna fall. That's my expectation. And now I could be totally wrong. Maybe their forecast is even more crazy, and it just skyrockets to 1,000, and then it's like, haha, loser, you cut, you trimmed, whatever. Okay, so you made a little less than you could have, but it's crazy. So yeah, there's certainly some yeah. Oh my God, your implied volatility on NVIDIA is 11%. The next trading day, is that right? The next trading day is NVIDIA's earnings? I think it is. Oh wow, wait a sec, because today's the 16th. The next trading day is, no, that's wrong, the 20th. Earnings are on the 21st. Okay, so yeah, I mean, some of this stuff like ARM, oh my God, I'd be trimming so hard on ARM because that thing, when SoftBank starts selling, it's gonna collapse. So I can't touch ARM or Supermicro with a 10-foot pole, and I'd be trimming some of the things right now just to raise some cash, and then I could buy the dipply doodla later, or just to have more cash on the sidelines. Those are just things that I'd be thinking right now. Some of the real runners. I would even consider that probably, honestly. I'll take a little bit off the table, off like some of the crazy high flyers here, like your Metas, your Microsofts, or whatever. There'll always be another dipply doodla opportunity. But I mean, you've got a nice little resistance here for Microsoft, so we'll see. Those are just some ideas. Yeah, actually, Max, yesterday I suggested that. Yesterday I suggested SMCI should basically dump a bunch of shares, basically just raise money, right? Absolutely. And then they could buy a lot more inventory. Like, they should have done that a while ago already. I started my company sometime this year. We will acquire our first. Oh, good for you! Congratulations! I'm excited for you to buy your first property. You're gonna play a straddle on NVIDIA with 11% implied volatility, dude. I need a massive move to make money. I like straddles when the implied volatility is low, and then I end up getting a big move, right? That's what I did on Tesla, and it that made money. That was nice. It was like a little 30% straddle gain. But anyway, let winners run. Yeah, that's an option too. Nobody says you have to trade. Then the thing is, the reason usually people want to let winners run is because, if you sell them, you got to pay your taxes. So that pisses a lot of people off. Unless, of course, you do it in an ETF. If you had control of your own ETF, you could quite literally take like some NVIDIA shares and turn them into cash, like a cash-like instrument, like a 2-year treasury bond, and pay how much in taxes? 0. Could you think about that insanity for a moment? You could take a stock that ran like Super Microcomputer that you held in an ETF and turn it into cash or cash-like instrument and pay 0 in taxes. It is the greatest tax hack that exists in the world. Unfortunately, it's very expensive to have an ETF. One day it'll be less expensive, but it's amazing. It is the most brilliant tax hack. Thanks, Rex. All right, what else? Selling your best stocks, everyone, they outperform is a recipe to underperform. Well, maybe. How much does it cost to run an ETF? Well, right now, probably, realistically, it's probably $400 to $500K, which is insane. Like, that doesn't make sense for anybody but very few people. It's stupid. What about a Roth? Sure, a Roth is a great way to do that if you just want to put, $6,900 into it or $7,500 or whatever the limit is. No, I'm talking about the people who, some of y'all are here, you have investment portfolios of maybe you have the capacity of investing an extra $100,000 a year or more, and you have a portfolio between like $250 to $5 million, right? Those portfolios, you're not doing that in a Roth, unless you're waiting 80 years. So those are the people that really need to be able to use these sort of tax benefits. But the system's so effed against that right now. You're in a tough spot. It's always the richest get richer because of all the hacks that are only possible in certain vehicles. It's annoying. But anyway. So in the Netherlands, we do not pay capital gains. Das ist sehr gut. That is true. I mean, some areas you just don't have to worry about that. But then also in some of these countries, I don't know if the Netherlands is like that. Holland. Some of y'all, you pay taxes based on the actual value of your assets as opposed to on sale. So I don't know. That one's worse. No. I didn't say 500K to start an ETF. I said 500K every damn year. Yeah. That's slight different. Slight difference. Oh no, Redfin's not gonna go bankrupt. I mean, but there's so little volume. Their revenues are probably in the toilet. I wouldn't buy them. They're a horrible time. Yeah. See, in Sweden, we got taxed 0.8%. The entire portfolio. See, yeah, I mean that's a lot of money, a lot of dollar dollars. But you know what? That's okay. I mean, everybody's happy in Sweden, right? Text to video generation, we have seen that. It's good for like really short clips. Did miss the annual party. So Kevin, predict the recovery of China's economy. My biggest concern with China is the Chinese are not like Americans. Americans are like, the economy's bad. Keep buying everything. The economy's better. Keep buying everything. Like, Americans spend money. That's the way it works. 72% of our economy is driven by the consumer, and the consumer in America spends. And there's no one better than the fintech capitalistic economy capable at getting consumers in America to spend even more money. Like we were talking about yesterday, this app is blowing up in the App Store. It's now at, I don't know, yesterday it was ranked 200 in the App Store, and then it was like 175 yesterday when I was on date night with Lauren. It just keeps getting more popular. Buy now, pay later for your rent. And I'm like, bro. Oh, it went down a little bit today. Maybe I've been talking about it too much. Okay, I'm patting myself on the back there. But anyway, buy now, pay later for your rent. What the hell? A lot of people using it. I'm just telling you, it's in 10 years, we'll have some kind of crazy recession that's driven by the consumer just imploding. But anyway, yeah, so when it comes to China, you have a completely different mindset of a consumer. Like the consumer in China is like, China effed us. The CCP screwed us. They are afraid of spending. They're a saver economy. They are the opposite of Americans. They save dollar hollers. And they don't like debt. Anybody who just took on debt in China on real estate got burned. So in China, you get burned for taking on financing. America just encourages it. It's crazy.
Speculative stuff. Super Micro boomed and already kind of had a mini crash before the open this morning.
Flex. The app is called Flex.
Been watching many people, anyone in short arm over the last week or so has been very unhappy. All right, we've got an opening bell right here at the New York Stock Exchange, and you can take a look at the real-time exchange as well, get a sense for how the market's going to open. Here's the big board, UBS, with the NASDAQ, harboring parts, providing support to cardiac surgery. All right, Mike, I mean, you've said it. We've sort of circumnavigated what was a difficult
There
CPI
you go.
number in some way.
There's the open for, yeah, somebody here is asking about, well, okay, so for the ETF expenses, the next thing that usually isn't considered in part of that because it can scale up is your entry cost for compliance, like attorneys. And so, yeah, it's between 3 to 500K is the way to look at it. It is between there. And it depends exactly how you want to scale out the costs and what else you're using your compliance attorneys for. So there are some complexities to that. But yes, it's somewhere around there. But yeah, let me just put it this way. I don't make money. It's like a nonprofit. But that's okay. So, okay, Coinbase up 13%. We've got Toast up 11. So coming off back from the dead here. ARM down 2.3. NASDAQ going red. Super Micro going red. Oh, time to short it. Can I even borrow on this sucker to short it? Oh, that'd be so fun. Marginable. Shortable. Maintenance requirement 100%. See, you guys just gotta play the day. That's what you gotta do on this. Let me see. So you go the weebs. Let's see if it's even possible. Okay. Options. Let's see here. Single option. Put. What are we trading at? $1,000. You're already going up again. God, $1,028. This thing's freaking insane, man. Okay. Oh my God, the prices are insane. Holy crap. Yeah. Okay. Wow. Yeah. This is pretty wild. That is absolutely wild. These are some wild prices. I'm going to do it for the giggles. 0 days. I don't know. Do you do it for the giggles? Do you do it for the lulz? I'm going to do it for the lulz. Okay, I'm doing it for the lulz. Bye. It's so stupid. Oh, it's too funny. Just for the lulz. Orders. Oh, of course. Can't go through. Because the market is moving so freaking quickly. You put in a limit order. Doesn't freaking execute. That's always how this crap works. As soon as you want to put something in, it just takes for freaking ever. But then again, it's a low market. And it's going green. Maybe it's a good thing. I can't get anything to execute on this shit. I'll do it in a sec. Nothing executed yet, but I'm watching it. Anyway, so I would love to short this sucker and see what happens. I think it's so stupid. Somebody says, screw the limit. Put it through at market. Yeah. Anyway, okay. All right. So what else? What else? Q's just went negative. Q's down 5 bips. I got to go shortly here. Oh, wow. Trade Desk, 23%. Let's go. It's my boy. My boy Trade Desk. Let's go. I like to see that. Oh, Tesla's negative 0.8%. Enphase down 0.1. No.
Lost the lead.
Palantir's at 25 bucks. Down a bit. Obviously, the PPI numbers this morning are going to shove this crap around. So be watchful of that. You've got Roku's down 18%. Let me quickly see what the suits have got here. Let's see here. Bond yields likely capped at the end of a long weekend. Let me see here. Is that true? Or that should be at the beginning of a long weekend. 4.31. Oh, yeah, it does say ahead of a long weekend. Traders dial back rate cuts. Ah, yes, I wanted to see that. What are the odds? So we are now scaling back rate cut wagers to 84 basis points for 2024. Wow, that's actually a nice little decline. A strong decline, Lee Doodlaw, in rate cut wagers there. You are looking at 3 rate cuts, basically. Only slightly more than 3 rate cuts. Oh, what's it called? When I want to look at the rates. Oh my god. I can't think about it right now. Whatever, I got the answer anyway. So, that's wild. We're down, I mean, we were like, I was at a JP Morgan event yesterday, and they were talking about how they still see 7 rate cuts this year. And, yeah, I guess not. The market disagrees. Okay, somebody wants me to look at Dropbox. Dropbox, 15%. They must have had earnings. Oh, wow. Dropbox. Oh, I really got to go. Dropbox. I got to go to El Hospital. Dropbox, 635. Oh, okay. Well, did they just guide poorly? Biggest drop on record, 19%. I don't see a guide here. Yeah, I don't know. I'd have to look at it later. Anyway, NVIDIA broke the resistance. NVIDIA breaking the resistance is not what matters. NVIDIA closing above resistance is what matters. But thank you for reporting this. In the meantime,
even though I'm a licensed financial advisor,
love
real
y'all.
estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
yeah, so NVIDIA needs to really close above this line to really set off some euphoria. Supermicro's at 6%. It's still so freaking tempting to short that sucker. I mean, it's literally like, you know, putting $2,000 on red or black. You know, it's probably very stupid. Anyway, love y'all. I need to go. Thank you so much. Goodbye.